Hi guys, it is November 17, 2023, and you're watching Awesome 10X. My name is Nikki Uhilio. Let's begin today's class. We are seeing dramatic drops of the dollar this week, cooler CPI, and small cap euphoria. TLDR, too long, don't read. I understand this is a video, so you're not going to read at all. Let's begin. Okay, let's present. Okay, so what happened this week? You can see that for S&P 500, the performance for the week was pretty strong. Expect that the market will continue to stay elevated, albeit even if it can take profits. These types of gains are already strong, such that S&P 500 is now closing at 4,500 or even above that. Your Nasdaq is actually close to the highs, closing 3% up for the week, and your Dow Jones is 35,000, closing 2% up for the week. As you can see, the volatility died down. Your UK, your DAX, your France all goes up. Nikkei went up except for China. You're seeing the S&P 500. Let's give you a recap. S&P is now 4.5. Your Nasdaq is 14,100. Dow Jones is trading at 35K. You've got UK 7.5, DAX 16,000, CAC 7.2. Nikkei is trading near 34,000. Indeed, the market is very much in the extended level and yet continues to trade elevated. You're seeing also for the week, dollar peso, of course, weakened for the dollar, such that from 56.50, it sharply fell down further this week towards 55.50. Now a 1 peso 50 drop from the 57 area that it was trading just 3 weeks ago. So fast, so fast. You can see that the dollar index is also falling from 107 to 104, such that it's also precipitating the strength of this rally for the small companies. You're seeing that when it comes to the dollar, with a weakening dollar, usually gold rises, commodities rise, and a lot of small caps goes up. And if you take a look at earnings, it indeed on the earnings season, you're getting a lot of companies that people did not expect to do well actually start to be having a relief rally. One case, for instance, is Target. Target surged double digits, not because the earnings were really wonderful, but simply because it beat consensus expectations. Revenue still fell 5% for the third quarter, but since the stock is already trading at 110 prior to the earnings number, the stock actually rose back towards 130. Now you're seeing that retail company Walmart fell more than 7% last night, one of the largest drops, simply because they are expecting food prices to fall in the near future, deflation alert. Walmart is saying that the top line is expanding, albeit just 5%. It wasn't really a bad number, except that Walmart was already trading at all-time highs prior to the earnings, meaning there was no room for any mistakes. Morningstar commentary said Walmart delivered third quarter results mostly in line with expectations to attract value conscious customers. They did cite spending patterns leading into the holiday season was tumultuous. Inflation and economic conditions remain headwinds. And for Morningstar, the stock is already at or overvalued or fairly valued territory at $145. And you're seeing that Walmart improved 5% in the third quarter, still with their sales. You can see Walmart growing their sales 5% and Target having their sales revenues decline, having opposite movements simply because of valuation. Take note that Walmart is trading at 30 times multiple prior to this earnings number, and Target is trading at 15 times multiple even after a sales decline. You're seeing Target shares jump more than 17% in a single day just because earnings have beaten. Now, take a look that they are all saying that there's weaker discretionary spending amidst deal-hungry shoppers. So you're seeing the following things. Target 260 dropping to 110, rising to 130. Although it can rally, you have a lot of resistances here at 160 and 170. And you're still seeing that downtrend in Target still remain intact. And it's going to be quite a hard climb to just make a V-shaped rally for those bulls out there. You're also seeing last night Cisco stock falling 10%, the worst day in over a year. Cisco shares are closing down after beating expectations for revenue and earnings, but simply giving light revenue guidance for the next quarter. So you're seeing that the company, just because of a forecast, is dropping very fast. Cisco systems dropped from 54 to 48 in a single day. And I think this is showing to you mixed reports and mixed earnings commentary from every sector in the market and from every company in the market. Walmart, you're seeing that quite a big drop, 168 to 157. Could it fall down to 140 areas before people start buying? Possible because of valuation standards. Macy's progress on key initiatives going into holiday season. Take note that Macy's also went up more than 10% last night, rallying 21% in a single day from 11 to 13. Again, just like Target, low expectations equals easy beat. Low expectations makes people look at the value first rather than whether the company has a strong moat. Indeed, those companies that are just simply beating earnings are starting to rally. Notice from $36, this fell to 11. People felt compelled that there should be a short covering and some relief rally, so to speak. This can rally further towards 15 and 16 with a lot of buyers there at 11. What we thought of Macy's earnings, not me. This is about Morningstar commentary. I'm just going to read it for you. Macy's same-store sales still fell 6% for the third quarter, but this was better than the forecast of a decline of 8.5%. So it's basically bad news, but it's better than bad. Now, you're also seeing that Macy's is a challenge position among traditional US department stores. However, if you look at the bright spot, they still have 40 million active customers. They have a sizable real estate holdings and still a very large e-commerce operation. Again, the meaning of the way that people are now buying Macy's and Target is not because they're the best in the industry, but simply because they have expense discipline, they are improving inventory control, they're starting to be free cash flow positive. Now take a look as well on companies that people are surprised and elated to have good numbers. Such a story would be Uber. In Uber 2021 to 2022, this stock dropped from 64 to $20, and starting around May to about May 2022 until today, the stock is steadily rising with a V-shaped reversal and a rally from 20 all the way to 54. What a great move for Uber. So what happened? Uber's profits and demand cruised ahead. The ride-hailing and delivery platform still recorded another quarter of profitability. Bookings, or what customer pays for rides and deliveries, still rose 20% year over year, even if the freight segment has been struggling. Revenues are soaring to $9 billion, dollars, and it would have climbed higher if not for business model changes in some markets. Advertising revenue, cost cuts, and efficiency improvements have helped expand margins. It is impressive, and therefore, with an increase in users, orders, and frequency, the number of drivers also hitting 6.5 million. You're seeing that Uber stock is still cruising up ahead. I do think that with Uber already nearing that $60 mark where it was in 2021, you have to be careful about the upside that's left in Uber. So we're actually looking more for people to see that these stocks could be pricey already. Okay, let's take a look at Roblox reported rise in global growth. So you're noticing different earnings, different movements in stocks. The online gaming platform said their bookings still rose, number of daily users was up. Roblox was actually up 20% after the earnings, and you're seeing that Roblox is also available on PlayStation in October. So this is going strength after strength, and people are still seeing a value play on Roblox. So we're seeing that Roblox is going from 25 to 39. Maybe people will see this rally towards $50, and dips on Roblox will be bought. We're seeing actually companies like Roblox, Roku, Shopify, Square, or AKA Block, are all rallying because of higher, better than expectations. All right. Let's take a look at some consumer staples. Take note that snack giant Kellanova benefited from higher prices. You're seeing sales still increased 4%. Drop in volumes still did diminish the results, but the stock is already down from 70 towards $50 back to their 2019 lows, back towards their 2011 and 2009 areas of resistances. Resistance becoming support. So you're seeing actually that snack food giant Kellanova is still getting quite a lot of buyers. Indeed, we're seeing consumer staples that are already beaten down to a pulp, especially those that are down 40, 50%, are already starting to see some buying action. Southwest Airlines, which is a lot of airlines, are already functioning, and traveling is already strong. You can see from the numbers. And so Southwest Airlines also, from a week-on-week perspective, is rallying and starting to come back alive from the $24. Take note that this drop from $65 all the way to 24 back to those 2020 COVID lows we're seeing that people are willing to bargain hunt on these types of names. Global Jets ETF, which represents the index of these airlines, have come down from 34 back to $14, and we are seeing that rally for the week from 15, 14 towards 16 and 17. Indeed, for some of these names, we're seeing a change in sentiment that there are bargain hunters looking to buy this very beaten down sectors already. Take note as well for companies that did well on the travel sector. Expedia actually rallied pretty strongly this week after earnings was released, and this broke above the $123 resistance, which is now perceived as support. So we're seeing some strength in a lot of travel related plays, beating people's expectations of consumer discretionary slowing down. Take note, Hyatt Hotels benefited rallying here from about $100 back to 113 and could even break above 120 if their numbers continue to do well. You're seeing also a few positive cash flow entities like Lemonade, considerably sooner than expected, is now the time to buy. You're seeing Lemonade after dropping in that May 2023 area this year of $10, rally to 25, back to 10 this November, and now rallying back to 15. So we're seeing this cyclical companies starting to find bottom fishing. A lot of people are starting to nibble and buy into the small companies, IWM type of names. And we are actually saying that if you really like companies like these, you're already getting quite a lot of buyers, just like what happened in May 2023 when people felt that the worst was already over. So you're seeing Lemonade also having their revenues rally and their income is still at a loss. But if people find that they could be free cash flow positive within just a short span of time, people are willing to buy. So Lemonade has reported revenue guidance for the year, sped up their timeline to become cash flow positive. Take note, these companies are still negative and it's just expected to be cash flow positive for this company by 2027. So be aware that these companies could rally but will also get faded after a substantial run up of maybe 50 to 100%. This is Oatly Group. Take note what happened for this company. This rallied 50% in a single day. Of course, this has dropped from $20 or $10 all the way to 50 cents. So it is quite just a small type of good news can really trigger these companies to go 50 100% even in a single day. Only stock popped off just simply because of the availability of insomnia cookies nationwide. So it's just that type of news event that can trigger a lot of short covering for these type of companies. Gap is soaring 20% this day because of an Old Navy brand renewal and controlled inventory. Third quarter earnings beat, offering holiday quarter guidance. So you're seeing that Gap already rallied from 8 to 16. I think there will be no big upside in Gap, even if the earnings came out well. But you're noticing that the pattern is pretty familiar, wherein stocks that are beaten down are rallying 50 to 100%. And so if you want to have a trade, it looks like for this week, the market is still heavily beaten down for the small companies and heavily overbought for the big companies. And there is still a rotation happening wherein small caps, the TLDR, the too long don't read part of the market week is simply small caps dominating large caps. There is, of course, the hope that Federal Reserve is done with raising interest rates. And for that, if you are saying that interest rates could go lower by next year, who would really benefit? Of course, it's going to be the regional banks, the real estate, and a lot of these small companies that are yet to be free cash flow positive. So we're seeing actually for the week, clean energy names like Blink Charging, EVgo, Sunrun, Plug Power, FCell, Bloom Energy, and Face for solar, ChargePoint, SunPower, Brookfield Renewable Power, Ballard, Tesla, Array, Solar Edge, QuantumScape. Notice that these names have gone up 9, 10, 20, 30, 40% in just a single week. And we expect that these clean energy names will continue to benefit and their dips will be bought by next week or tonight if they continually fall on a day-on-day basis. We're seeing also the consumer staples. If interest rates indeed start falling, then the cash flow yields of these dividend aristocrats will really become very, very well bought by the market. Companies like Clorox bought up 4% for the week. FedEx up 4%. Tyson Foods is trading up 3% for the week. Kraft Heinz 3%. Hershey's 3%. Apple continues strongly. Philip Morris up 2%. Campbell Soup up 2%. Microsoft is trading still at all-time highs, up 2%. McCormick up 2%. For those who are looking to buy consumer staple select sector, I do believe that these stocks are starting to bottom out, and we would recommend to take a look on companies like Kraft Heinz, Tyson Foods, companies like Hormel Foods, Mondelez International, and take a look at Hershey's companies. Of course, we like Coca Cola and Pepsi. However, you do have to pay quite a premium valuation if you really want to own Coca Cola and Pepsi, as they're not really that cheap, but they're not also too expensive. It all depends on interest rates. Okay, so I know that it's already late, and pardon for being late today. However, it looks like the market is still giving a lot of opportunities. Again, if you're gonna buy into the market, it's very clear that the market is loving small caps. We are very, very clear on that IWM, IWC, small caps and micro caps are outperforming because of cooler CPI data. So if you really want to buy into the market, you have to take a look on names like SunPower, names like Sunrun, names like clean energy names. You're also going to have to worry about the pace of rallies. Example, even if Roblox will continue higher, take note that there will be resistances as it reaches as high as 45 or $50. So it's not going to be an out of the woods story, because as you've seen, when valuations become too high, even if earnings do well, we see actually companies like Walmart also fall. Palo Alto Networks fell, Cisco fell. So this is going to be a mixed report, and that's what we are here to share for you. And see you again next week for another awesome 10x weekly recap. Thank you and goodbye.